All right, everybody, welcome on back. This is Matt's on the Move. Matt's on the Move is gonna talk taxes, tax time. All right, brought to you by my many years of experience now. So, guys, I've been doing my own taxes for quite a while on my own in the gig economy because Uber, they gave me some discounts and I took advantage of them, and I just got kind of hooked on TurboTax. Once you figure it out, it's not so bad. Anyways, and things got a little hairy one year. Hey, if you haven't already, hit subscribe. Toggle the notification bell to on so you're always notified anytime I drop new, cool, interesting, and also entertaining content. You'll know. Leave your guy a like. That's right, and let's get back into it. So, yeah, I didn't file for like 2 years, right? So, finally filed for last year and the year before. The year before was the one that I didn't file. Went through the service called Keeper Tax. I wouldn't recommend them. Reason being is, remember, going back to what I said before, I've been doing this for quite a while on my own now, and I know the laws and stuff. I know how to do my research, all that goodness. This person, this service, basically what they do is they give you an app, you upload all your stuff, connect to your bank so you can find write-offs, all this stuff, right? Tell them what you do, how much you make, all this stuff, right? They keep track. And then the lady tried telling me that I couldn't write off my car payment, and I'm like, are you kidding me? You're supposed to be a certified public accountant, and you're telling me that I can't write something off that I know that I'm legally allowed to write off and definitely should write off. So anyway, so I said, forget you guys, and moved on. You guys, taxes are so important. Don't listen to me. Go see an accountant. But let me just tell you some things that I have found out along the way, and that is vacations. So you guys live in a rural area, but you go to a larger city that's close by to work, yada yada yada. So you're like, oh man, I really want to go to the beach, whatever. You say you live in California or Texas, Florida, whatever, wherever there's a beach, right? Like, oh man, I want to go to the beach. So you book a hotel and all this stuff, and you're like, oh man, I'm paying all this money. Man, I gotta really keep working. So you gotta work harder and all this stuff, and then just so that you don't have to work on big. But then you think, man, I could just squeeze a little bit of work in my vacation, and that's what you do, guys. You go on vacation, and these apps are great because they allow us to work anywhere we want in the United States. How cool is that? So anyways, so the best part about that is you can go on vacation anywhere, right? It doesn't have to be your home state, none of that stuff. You can go anywhere. I could go to Hawaii if I wanted to, DoorDash. But the thing about it is that then you get to write off the hotel, your food, your gas, all that stuff, right? All of it gets to get written off on your taxes. That's less money that you owe. So hey, look, the more you know, the more you keep. All right? And the more you keep, the better you live. So you guys got to really protect your income. That's why I always tell you guys, strategize, be picky, know when to work, know your market, yada yada yada, know how to read the apps, all this stuff, right? And it all plays in. You got to always kind of be dialed in and on point in the gig economy. So that being said, taxes, man, taxes. You can write off vacations. Okay, the moment you leave your house to go to work, whether you turn the app on or not, when you leave, or if you drive somewhere and then turn it on, the moment you leave your house, track those miles. Track them all the way till you get home, and then do what I do. Do all your personal shit while you're working, okay? Because then all those miles are jumbled in, and you get to write them all off. And the best part is that you just kind of go from working to doing what you got to do, then going from doing what you got to do to working, and it's there's just smooth transition. you're still making money, but you still are getting what you need to do done, right? Now, last year I made somewhere in the 50s, right? I think it was like 56. But anyways, so I made somewhere in the 50s. And the amount that I owed, I'm getting money back too from the state of California. But the money that I owed was only like $800. And that is less than 2%. It's more than 1%, but it's less than 2%. Somewhere around 1.5, 1.6, 1.7%. I ended up paying out of the money that I made. So you guys do the math on that one, okay? Keep in mind what I just said, and remember, all across the U.S., they want to make us employees. You know why? They get more money. Everybody wants the money, buddy. Follow the money wherever it goes, you know. So that's all it is, you know. It's a money game. I didn't even write off everything that I could have written off. I could have probably gotten that down to like I did the year before. The year before I made roughly around the same. I made a little less, but the year before I took it from like a fucking $10,000 or $8,000 that I was owing, $9,000, something like that, to all the way to $250, and then the penalties on that too. That year only went up from $250 something to $444. So that was really less than $200 increase right there that you see. Because what happens if you don't file an extension and then you just don't file, for every month that you don't file, for whatever it is you end up owing, they're going to tack on a penalty percentage, right? So in this case, it's 5%. So they were tacking on like 5% every month. So it didn't really go up like a whole lot, you guys. But yeah. So and then I get to make a payment plan. I'm going to do all that. You guys can do payment plans. You guys can do quarterly payments. I don't know if you guys know about that. You can go on the IRS website and you can make quarterly, estimated quarterly payments. And the cool thing about that too is that if you overpay, you're gonna get some of your money back. So taxes, you gotta file them. If you're not gonna file, you need to file an extension every year for, obviously every year that you're not filing for. And then just keep in mind, like 2 years, man. 2 years, I almost made $100K. 2 years of taxes. In 1 year, I didn't even file on time or file an extension for it. And anyways, the penalties on that. And I only ended up owing a little less than $1,300. Think about that. If you guys, if I didn't know what I knew, and I only wrote off, some of the things, obviously, the accountant's going to know some stuff, and they're going to make sure you get it written off. But, if you don't know what you know, you get screwed. I would have been paying probably, something like $24,000 for 2 years. Oh, yeah. Yeah, so you guys got to make sure you're getting out there and getting after it, okay? Go out there and get after it. I say during the fast times, when money's good, you need to be saving more, 20-30%. During the slow times, you need to save 5 or 10% for taxes. Okay? Probably about 5 or 10% for repairs as well, and whatever you want for a new car. Save that. As always, thanks again for tuning in. Matt's on the move, over and out. Let's go get to this